Today, I'm going to teach you the top 9 ways that mortgage lenders rip people off. Make sure you stick around to hear about the rip-off tactic I call the smash and grab. Knowing how to avoid just this one predatory practice can save you thousands. The number one way that lenders try to rip people off is what I call junk fees. They say these are mandatory fees, but these are just fees they tack on because they try to squeak out every little dollar from your wallet. So make sure in the fees estimate you're looking at underwriting fees, processing fees, application fees. All of these fees are just junk fees they add in. As a local broker, we don't charge any of these. So make sure that you're talking with somebody you trust before you sign that loan estimate. Rip-off tactic number 2. I call this rate dancing. This is when the rate question comes up and you're asking your loan officer, hey, what rate am I gonna get? And they tell you, you know what? It's too early in the process for us to discuss that. Once it gets time to lock your loan, then we'll talk about what rates are gonna be, because you know what? They change daily. No, this is a huge red flag. Your loan officer should be able to give you a good faith quote up front based off of 2 days' rates, exactly from the rate sheet, no padding involved. So if somebody's dancing around that rate question, that's a big red flag and you probably wanna go somewhere else. The next rip-off tactic is exactly the opposite of the one before, and this one is called rate sniping. This is when you ask about rate and the lender tells you a rate that is just obscenely low, way lower than everybody else. And they do this to get you to stop shopping and searching what else is out there. And they can do this because they can tell you whatever they want on the phone until your rate's locked in. It doesn't matter. So if somebody's giving you a super low rate, the tactic they'll use is this rate sniping, and then when it's time to lock, they'll just tell you that rates changed, and that rate they told you is gonna be much higher down the road, and they're hoping that when it's time to lock, you're so far in the process that you can't go anywhere else. So watch out if you're getting quoted a rate that's much lower than everybody else. You know, if it's too good to be true, it's probably too good to be true. Rip-off tactic number 4, and this is called the application fee. If somebody says, hey, to get started, you need to fill out this form and you need to pay this application fee, that is a big red flag to turn around and go somewhere else, because a good lender is never gonna charge you any upfront fees. It should be completely free to do your application. So why do they do this? They do this to wanna lock you in and tell you, hey, this is just standard operating practice. If you wanna work with us, you gotta pay this application fee, because they know you're less likely to go somewhere else. So if someone's trying to charge you this application fee, that is a rip-off tactic. Do not pay it, and I would highly recommend that you work with somebody else, preferably local. Rip-off tactic number 5, and this is what I call me. And this is when the loan officer only cares about themselves and their commission. So if they're being super pushy, pushing you to get going into a program, pushing you to use their realtor partner, pushing you to use their title company, that's a big red flag, because they might be getting kickbacks on the side, which is highly illegal. Now, there's nothing wrong with referring somebody that they trust, but as a consumer, you have to do your due diligence and make sure that who they're recommending to you is actually good at what they do. So don't get caught in that trap of somebody bulldozing you, and if they're all about themselves, you might want to go somewhere else. Rip-off tactic number 6, and this is called, this is your only option. So if a loan officer is telling you, hey, this is the only thing that we have, you have to qualify for this, you have to do this is the only way to do it, that's a big red flag, because that means they only have one program that is offered. You want to make sure you're working with a lender that has multiple lenders, they're working with multiple programs, so they can find the one that suits your situation the best, because if you just get pushed into one size fits all box, you're most likely going to be paying much more in rate and fees compared to if you found a program that was perfect for your situation. So make sure you're working with somebody local that has multiple programs and can find the best one for you. Rip-off tactic number 7, and this is called blame the loan estimate. So this happens when a loan officer quotes you something on the phone or in an email, but then at the closing table, the numbers are drastically different, usually higher than what they quoted. And they just say, hey, it was on the loan estimate. You signed it. It is what it is. I'm sorry. And they do this because they know that most consumers cannot read a loan estimate, because most loan officers can't read a loan estimate. They're like written in Latin. So what I recommend is make sure that you get a fees worksheet that breaks down step by step in layman's terms what all the costs are going to be, so that you don't get to the closing table and get that surprise like, oh, everything's a lot more than what I anticipated. Rip-off tactic number 8, and this is my most hated, and it's called the smash and grab. And this is when the loan officer deliberately has less fees, lower rates, everything's lower on the estimate that they give you that's not the official loan estimate, to make you not go anywhere else. Because as we said before, nobody knows how to read a loan estimate, and they're just hoping you get to the closing table, you sign, you think it's a great deal, but when somebody like me reads that after the fact or even during in the process, I've seen people being charged over $8,000 in junk fees that they didn't even know, and they were happily gonna sign and had no idea they're being overcharged. So make sure that you don't fall for the smash and grab. Know all the fees up front and do not sign anything until you know exactly where all your money is going. Rip-off tactic number 9, and this is called you signed the paperwork. So let's say you're going through the process and then something just seems a little off and you start asking questions and the loan officer is like, hey, you signed the paperwork, it is what it is, you have to move forward. That is absolutely false. You do not have to continue with any loan, any refinance, any purchase unless you sign the final closing documents at title. And if it's a refinance, you have 3-day right of rescission after that. So don't let anybody strong arm you into saying you have to continue with them or with this deal unless you've already signed it title. You always have an option to get a second opinion and go somewhere else. So just make sure you're working with somebody that you trust and you know all the numbers up front before signing that final document at closing, because before then, you're not locked in. I want to thank you for watching the 9 ways that mortgage lenders rip you off. I hope you learned a lot from this, and I hope it saves you from a lot of heartache and a lot of lost money in the future whenever you do a purchase or a refinance. As a local lender, we're all about transparency and making sure that we educate our community so they're getting the best deal possible on what's mostly the biggest purchase of anybody's life. So if you have any questions about buying, refinancing, or selling, we are your mortgage resource and we're here for you if you have any questions. So reach out, we're always happy to help, and let's make sure that you don't lose a ton of money in the process of your home loan. Thanks for watching this one, and hopefully I'll talk to you soon.